Welcome to this video providing an introduction to internal audit. We begin with Module 1, covering the introduction to internal audit, including its overview, role in governance, and risk management. Internal auditing is an independent, objective assurance and consulting activity. Its purpose is to help improve operations, governance, and risk management. It has evolved from early financial oversight to a modern advisory role in strategy. Internal audit focuses on improving internal processes and reports to management and the board. External audit reviews financial statements and reports to shareholders and external stakeholders. Internal audit plays a vital role in corporate governance by ensuring the system of rules and processes is effective. It also evaluates risk management frameworks, utilizing common standards like COSO and ISO 31000. The internal auditor provides assurance on internal controls and risk management. They evaluate control effectiveness, ensure compliance with regulations, and support management in achieving organizational objectives. Module 2 focuses on internal audit standards and frameworks, providing an overview of IPPF, RBIA, and the role of risk management. The International Standards for the Professional Practice of Internal Auditing, or IPPF, is a global framework established by the IIA. It promotes consistency, quality, and professionalism in internal auditing. Core principles include integrity, objectivity, confidentiality, and competency. The Code of Ethics offers guidance for honesty, impartiality, and professional behavior, providing necessary ethical guidelines. The standards of practice consist of attribute standards, focusing on independence and proficiency, performance standards, outlining criteria for managing audit activities, and implementation standards for specific audit types. Risk-based internal auditing, or RBIA, focuses on the organization's key risks. It aligns audit activities with risk management processes and ensures audits target areas with the highest risk impact. The principles of RBIA include focusing on risk by prioritizing high-risk areas and integrating with risk management through aligned audit plans. It requires continuous risk monitoring, and the auditor's role is to advise on risk. Linking audit to risk management ensures comprehensive coverage of strategic and operational risks. This connection enhances risk awareness across the organization and drives continuous improvement in risk management processes. The role in risk mitigation involves assessing the effectiveness of internal controls and identifying gaps. This provides assurance to management and the board while enhancing risk response strategies. Module 3 covers internal audit planning and key aspects of this phase. Developing an audit plan involves setting audit objectives and scope, defining objectives aligned with goals, and determining the scope. It also requires identifying key risk areas through assessment and prioritization. Resource allocation and scheduling requires ensuring the team has the necessary skills and bringing in specialists when needed. Time must be estimated for each audit phase to balance the schedule for timely completion. Communicating the audit plan involves gaining approval and support from management by engaging them with clear objectives and securing resources. This also means reporting to the audit committee for approval and providing regular progress updates. Module 4 explores the internal audit process, including understanding the audit cycle and various methodologies. The audit cycle involves key stages to assess, review, and improve operations. These stages include audit planning and risk assessment, audit execution and fieldwork, and reporting and follow-up. Audit planning and risk assessment involves understanding the business and identifying areas to audit. This includes establishing objectives, identifying key risks, and creating the audit plan. Audit execution and fieldwork involves gathering evidence, conducting tests, and assessing controls. This includes performing tests, observation, documentation, and analyzing the collected evidence. Reporting and follow-up involves compiling findings and presenting recommendations. Key steps are drafting the audit report, getting a management response, and following up on corrective actions. Auditors use various methodologies to gather evidence and assess risks. These include analytical procedures, data gathering and interview techniques, and sampling and testing. Analytical procedures involve reviewing data to identify anomalies or trends. This can be done through trend analysis, ratio analysis, and variance analysis for further investigation. Data gathering and interview techniques involve collecting evidence through discussions and document review. This includes interviews with management and staff, document reviews, and the use of questionnaires and surveys. Selecting a representative sample for testing ensures efficiency and reliability. Techniques include statistical sampling and judgmental sampling, followed by testing and analysis. Module 5 covers internal control systems, including key concepts, evaluations, IT controls, and cybersecurity. Internal controls safeguard assets and ensure the accuracy of financial reporting. The objectives include operational efficiency, compliance, and the reliability of reporting. The COSO framework for internal control consists of 5 components: control environment, risk assessment, control activities, information and communication, and monitoring activities. Evaluating internal controls involves testing both the design and operating effectiveness. Design effectiveness ensures the control can mitigate risks, while operating effectiveness ensures it functions correctly. IT auditing assesses risks and controls within the IT environment. Cybersecurity is essential for protecting against cyber threats and data breaches, highlighting the importance of IT auditing and cybersecurity. Module 6 addresses risk management and internal audit, focusing on identifying risks, the internal audit's role, and enterprise risk management. Risks are categorized as operational, financial, and compliance. Risk prioritization uses impact and likelihood assessments, with risk scoring helping to determine risk responses. Internal audit's role in risk management uses tools like risk registers, risk control matrices, and key risk indicators. They also audit risk management functions, reviewing identification and control effectiveness. Internal audit integrates with enterprise risk management, or ERM, by reviewing the framework and ensuring strategic alignment. The audit adds value by providing assurance, making recommendations, and enhancing organizational resilience. Module 7 covers audit documentation and reporting, including standards, report drafting, and follow-up actions. Working papers are critical as evidence of audit work, serving as a basis for review and compliance with standards. They also support legal and regulatory requirements. Best practices for documentation include clarity, completeness, timeliness, consistency, accessibility, and ensuring confidentiality and security. Drafting audit reports involves a specific structure, including an introduction, executive summary, detailed findings, recommendations, conclusion, and appendices. Effective communication requires clarity, balanced reporting, and prioritization. Follow-up and action planning involve tracking corrective actions, documentation, and continuous monitoring. This also includes ongoing communication, follow-up audits, and tracking tools to monitor the implementation of recommendations. Implementing anti-fraud programs relies on preventative controls like segregation of duties and detective controls such as regular audits. Establish confidential reporting mechanisms like hotlines to encourage whistleblowing and ensure thorough investigations.